Question, hold on. Sorry.
Sorry, go on.
Sorry, Maria. I should have hit that button. I'm doing it.
Go on, sorry.
Go ahead. I'm just, some of the students wanted me to record it. I didn't hit the record button. So,
So you probably don't understand why it's trying exit anyway, so it's fine. You were saying? Look, I think that what I try to do is keep my biases out of my trading. And we all have a bias. And what keeps me my bias out of my trading is price.
price rules.
And that's what keeps me doing the game, because we all have a bias and I don't care. And sometimes your bias helps you, sometimes your bias hurts you. It's like love. It's the same friggin' thing. It's a inherent thing in our system that you cannot get rid of, but you must overrule it within yourself. And the only way you do it is if you do the work, and you are very disciplined around the way you do that. Because, you know, I mean, you don't see those pattern charts often. And it's joyous to observe it, frankly, because I've got lots of shit trades that I need to pay for as well. Because that's, you know, don't think that when I speak, or Angela, or anyone in this room that's proficient at doing this, don't lose. We lose all the time, all the time. That's what trading's about. But you got to be able to manage your emotions when you lose to be there on the days you can win. And that's the key. Because if you get driven by the fact that, you know, no, I've had a bad week, I'm not going to take it off, then that's the week you probably would have won if you turned up.
Yeah. And you know what? And the best advice is when you're mentally fatigued, go take a break.
Oh, absolutely.
You know, you get screen stare, you're looking at something on the screen, it's not there. You know, it's not going to get any better if you keep staring at it. Go do something else, because just clearing your head, even if you just go for a walk and come back, will add to your clarity.
It's Judd, that's worth a lot. What I do other than a physical exercise when I'm tired behind the screens, I also do a little bit of the brain training. And this could be for anybody, you know, depends where you're at. You can play chess, you know, you can do this combat brain training that the US forces did when they were trying to walk through villages and not to step on the improvised explosive devices. Whatever makes your brain click, just go for it. You know, I love those combat brain training because they're several minutes, boom, and my mind is refreshed. I go for a quick walk, like you said, and then body and mind sink in.
You know, I was a competitive sailor. So every time I left the floor and went and sailed at a regatta with the guys I was sailing with, and they were some of the best guys who've ever lived, you know, you were so immersed in what you were doing that you forgot about everything else. But sailing is the exact same thing as trading. It's just in a different venue. You have to look up and see what the hell's going on. And, you know, the stuff that's going on in the boat is mechanical. The stuff going on the screen, you know, it's like clicking the mouse to get into a trade. That's mechanical. But you have to learn to look out and see. So that's why, you know, it's not any different than having a quote board like this and looking around and seeing the capital flows going in and out of different instruments. It's the exact same thing, is looking 3 to 4 miles up a lake or up onto the ocean, and is that wind shift moving left or right, and where do I want to be, and where do I want to position, and do I have a lane, and can I get there? It's the exact same mentality.
I couldn't agree more. You should have been born in Sydney. As a
Well,
sailor.
the Geneva trading, I mean, T. Freitag, you know, he had probably one of the most successful proprietary firms in the world. Okay. He only hired sailors.
Yeah. Well, but what he's doing is hiring disciplined people
Yeah.
that understand, and that's why you know, you look at those trades we're talking about before. Now, I get, you know, the world gets really caught up with this concept of, you know, the world's changed and analogs and you know, frequency trading has taken it. No, I look at it differently. I mean, I get the chance to buy fucking platinum at 948 because these fuckers throw it out. Because they're agnostic to anything other than short-term noise. You do the work, the long-term work that's always worked still works. It still works.
Always works. Always works.
So don't get disillusioned by all the noise. The only person that doesn't work is what judges said then, is you. If you get you right, you'll be a long way ahead of getting the market right. Because it's your emotions that get in the way of making good decisions. That's just not a market trading thing. It's a life thing. But I'm not here to give life lessons because I haven't got that right yet either.
Yeah, well, we all got that problem here. Platinum too. You know, we've been talking about the platinum. Now you go to the ancillary trades. Okay, you know, you go to platinum yen, which I hadn't looked at.
Exactly. You got to go through all the work. I mean, this is where it becomes, how hungry are you? Do you know where gold is against S&P? Do you know where platinum is against gold? Do you know where oil is against fucking copper? I mean, it's a whole new dimension. Now, there's another thing that I have to call him a mentor because he was very brilliant, but he was not necessarily a brilliant man.
Oh, he's a pain in the ass.
He's a pain in the ass. But you can get paralysis by analysis. So you got to be very aware of that. Don't get too caught in the weeds. If you do too much work, you just lose the board. That's why the simplicity of the bond price on the 30-year yield, which is, you know, 30-year yield US Treasury bond, and Ira can't make it because he's emailed me back, but that's fine. Is one of the biggest contracts in the world, so you pay attention to that. Oil is also, but don't get caught in the copper oil price. It can give you a lean, but it's not going to tell you where things are going.
Andrew, just quickly, could you just give me a quick summary again of the bond oil price again, just for the recording?
Sure.
Please.
So, okay. So my best way is that Andrew asked that question?
Yeah.
Okay. So my best way of explaining that is how I do my work. So on a Saturday, I will go, all right, I'll sit down and I started annual charts on everything, not just oil or platinum. I just didn't fluke finding platinum. I do it every weekend. And so I know the number, and then CQG gives me the luxury of putting an alert in, and if it hits it, I find out it's there. So I did the same thing on the 30-year yield, and it hit the 400-day. Now they're both through those numbers. Now they're both coincidental because they both drive each other, and they also drive other markets. As a consequence of that, I then make some decisions around what that means. Now, that then lent me to the platinum 618 intrinsic, which is at 945. And then I had an outside range higher week, Andrew, on the platinum price. So
yeah,
I bought platinum quite heavily at 935 to 955. Now, on Wednesday, because now it's up, everyone goes, oh, that's a great trade. Now, what if it failed? So I got a call alert from the CQG guys at 75 oil. So I just paid attention. I was watching it very closely. If I started seeing an ORL week, outside range lower week on the oil price, I would have bought the fuck out of bonds, and I would have got out of platinum. That makes sense?
Yep.
Great, thank you.
So
Right.
that's so you can't. I can't sit here and platinum them up and go, oh, it's all happy days, right? No, on Wednesday it was. I was like, oh shit, well, it was at 75. Oh, but it held it to a tick. Now, when a market holds a fucking 618 to a tick, you pay attention. Sorry to swear. You pay attention because it knows the number. It's not doing it by fluke. It knows the number. So if it came back through that number, which I've still got the alert on, and it does a technical damage to the chart, I will take the other side of the trade.
Perfect, thank you.
Richard Bernoulli's in, and he just put a link in for the Financial Repression Authority. All you guys should definitely sign up for this. He's one of the best interviewers in the world. He's got unbelievable guests, and every time he's had one of these FRA podcasts, we've come up with a couple of incredible trades off of them. So these guys are just idea machines. So I definitely do that. And Andrew, thanks for the question, and Perry, thanks for the explanation. And you know, Perry's been around the block. You know, he's been a fund manager. He's been a bank currency manager. He's seen the movies, worked with the best guys in the industry. He knows what's going on. And he's one of the few guys in the world that does. And he's one of the few guys in the world that when I ever ask him to pick up the phone, he's going to do it. Bart, what are you asking me here? Well, Bart, big time frame fibs don't go away. Big swing fibs never go away. It's how do they respond to them when they go to them each time. And
It's
you
a really
need to
good
pay
question.
attention to it.
It's a very good question, though, and I asked that question many years ago, but they're static; they don't go away. So if I think I understand your question, they don't get negated
Unless you have a new high or a new all-time low.
Well, yeah, no, you got to recalibrate the number. You got to know how to draw the fib, right?
Right.
So yeah, to Judd's point, look, I mean, this is why this business is beautiful, because there's so many nuances. Trend lines are a nonsense, because very few people draw them well. Howard Green used to draw them beautifully. It's kind of like an artist. I don't tend to encourage those learning to draw them because they tend to do it badly. Fibonacci's are easier because you can use them from intrinsic highs. Intrinsic meaning, you know, the absolute high and low. So
yeah, just remember too, excuse me for 1 second.
Go.
You notice that before I was looking at the wrong chart in crude. You have to look at the right chart. I was looking at a crude chart that showed a $6.50 low. It was the wrong low. This is the right chart. So when you're looking at a futures chart, you must make sure you're looking at the correct chart.
Oh, look, I send Judd often, you know, am I looking at this the right way? Because, you know, it's still difficult for me, the way, you know, the whole system in terms of the construct of the chart works. And there's another whole dimension that, you know, you've got to do Judd's learning program to understand some of that work. And the secret sauce is in the learning. And fundamentally, there's a lot more to learn. The numbers around some stuff are profound, but the simplicity around the Fibonacci is probably the easiest part, to Judd's point. And I've had people say, "Oh, don't use the low of -40." Didn't, you know, that's a bullshit number.
It's a real number. It traded there.
Look at a real number. I mean, look at the number. It was also the high in 2016. It is beautiful. Now you could have back tested that and known the market would have gone to -40. Now I'm not clever enough to do that, because that was the number. Because often I will do some reverse engineering in terms of objectives, and that's another level of understanding where markets can go. But I just find it cute by half that it went to a number that actually was the 618 of the old high in 16. That's just beautiful to me.
Andrew, it is
Yeah.
kind of interesting though, using the 650, that the 50% retracement came out almost identical to the 0.618 using the -40.
Exactly right. Exactly right. And these things aren't by fluke, right? It's you know, I'm not obsessed by Fibonacci's, but I'm obsessed by finding heat around numbers.
Yeah, there's there's proper use of Fibonacci. Don't use them on a daily chart. Do not use them on a short time frame chart. All you're going to get is sucked into using another number that's not going to do anything for you. It's the wrong stuff to use. Fibonacci is best used on long time frame stuff, on big swing stuff. That's the beauty of the fibs. Not on a daily, not on an hourly, not, you use fibs of the gaps and you use long-term fibs. And that's pretty much what I relegate my fib work to.
Yeah, I agree with that entirely. It's a marriage of all of it. It's a question of trying to understand your own personality, your own psychology, which is why I was so animated with Stan earlier around what his program is doing, because it's a wonderful way of learning about yourself trading. It's frankly wonderful until you get it right, because it's going to be very painful.
Yeah, and you want to keep taking your process and simplifying it. So my matrix work, which you guys aren't seeing, and some of you are, they're static numbers. They're not going away.
Yeah.
I can go back 40 years and I know where something's going to stop.
There's nothing that's a really profound comment. I mean, you must break down the complexity of the noise, and simplifying it is now, everyone in this room will do it differently. Markets have memory, they do, Ezra, and that's what Fibonacci's are about. But I mean, I know every friggin' date. I mean, I'm boring. I have every date written down in a book from Q1, Q2, Q3, Q4 in terms of the QEs. Now, the first two QEs, the market didn't go a price below. And that was because, I had a mentor that made me write it down. And he'd test me every fucking week as a prick. But I knew the fucking numbers. I knew the numbers. And, some of the hardest people in your learning curve do that. Now, I use dates still around Fed tantrums. They don't always work, but in terms of Fed policy or stuff, but I still use the date as a number. So yeah, it really is ensuring you are trying to find heat around a number. There's no better number at the moment than what the oil price is doing against the 30-year yield. They are pretty close in what they're doing, and until those numbers are defeated, the market's going to press higher yields and all the rest. Now, I don't know if anyone noticed yesterday, but gold miners had a really good day when gold was down. Interesting. But the biggest thing this week for me was platinum. I mean, wow, beautiful trade. If I have to say myself.
Yeah, you got to do your homework, and you have to simplify the work to what works for you. I mean, there's not a chance in the world that I would ever be able, if I spend another 60 years doing this, process information the way Ira does, or even Andrew does. So
no, I mean, Ira's a level. Look, I'm probably a better technician than Ira. Ira's a much better. He understands. I mean, I know. I mean, Ira's a level. Look, I'm probably a better technician than Ira. Ira's a much better. He understands. He understands. He understands the board from a price sensitive yield curve component much stronger than I do. Always does, always has. I mean, again, I mean, I'm, you know, I think he's not just a generous man and a decent man and a great man, but just a great trader. So you just listen to those people, right? So it's not who's better or worse. I mean, look, Judd's numbers are amazing, amazing. I mean, you know, matrix to matrix, you hear it all the time. Now, to understand the path of that and how you manage that Monday to Friday is a different dimension. How many times you wake up on a Saturday and go, I'm going to do it different next week? I mean, we all do that, right? And you still make the same fucking mistakes. The only way you change that is if you're fucking honest with yourself. So first, everyone in this room have a trading diary. Write about it. Review it on a weekend where you're not trading, and then do it again and do it again and do it again. You must have a trading diary, and you must only review it out of trading hours on a weekend. If you don't do that, you're going to repeat your mistakes.
Yeah, or you could just be like me and wake up in the middle of the night with the same nightmares.
No, that's not true, because you have a great product, but that's a very big point. You got to have a trading diary. Paul Jones told me that. I worked for him 7 years. I've had the pleasure of meeting the man, and great guy, but you've got to have a trading diary, because that's the thing. Because you're not going to reflect on it during the week, because your emotions are, your adrenaline's running. You know, you got Judd saying this, you got Ira saying that, you got Ezra saying that, you got Angelo saying this, and you know, the room's buzzing. It's energy and it's chemistry and it's biology. But on a weekend, you calm yourself because you can not have, you know, you're not clicking. And then you go, okay. But if you don't write it and learn from it, you're not going to change it.
Thanks, Andrew. That's great stuff. All right, well, we're going to come into the opening here, and they've taken the S&Ps both ways. They've taken the bonds both ways. The whole day is about running all the shorts out of the gold and the metals. And, you know, I think some of these copper miners are trying to pick up the gold miners for sure. You know, and energy. I don't think the S&Ps are going to be a very good trade all day. So, you know, you get they're 44 and a quarter on top and 43.75 to a half on the bottom. And you're right in the middle of that area. It's just not going to be fun to trade it. So I think you're going to be better off with, you know, I mean, the GLD is already up $2. The reason I set my quote boards up, I'm making sure I'm on the right screen. So you can see the pit. You know, we opened up at 1,660 in the platinum at 720, and they broke $1 and took off for 30. You know, the gold opened up basically on its lows and rallied $20. So it's nice, you know, CQG provides you the ability to put up the old pit sessions next to the all session stuff. Even if there's no volume in the pit session, it breaks out the capital flow, which is important, which is a US flow versus a overnight world flow. Because the US capital flow is when you typically have the highest volume. And you have more people participating in it. So it's more of a participation thing than anything. And I don't really care about volume. I just know when more people are playing, you know, that the directional flows tend to be better. So, here too, oil, 79.17 was the opening. They broke it a little bit. They couldn't even get at the last night's opening range, which was 78.86, and went up again. Oil's in a bull market. I think oil's going, we're 86 and then higher, closer to just shy of 100 is where I think oil's going to wind up here on this swing. And we know Andrew's just spent quite a while telling you what your risk is to be long oil this morning. It's those intrinsic fibs. So I know that there are a bunch of you that have come in and asked a few questions. See if I haven't addressed them, then ask them again and I'll go over it. Yeah. It's smart to turn off your P&L because you want to trade the market and not the money. And for me, the payroll numbers are irrelevant. The only thing that matters to me is price. Now, Ira, on the other hand, the data is, and Angelo, for them, the data is going to be relevant because they put it into their process. I don't put that into my process. For me, it's only price and market tone. Do people view it, as a bullish thing or a bearish thing? That's all I care about. So, going back to what Andrew said, you have to create a process that's right for you and works for you. Okay, so the opening print in the pit's 99.25 and the SPOOs. Let's see what they want to do here. Shopify's up again. Range Resources. Amazon's struggling at its 200-day again. That'll keep a cap on the NASDAQ. All this stuff looks a little different, so let it play out a little bit. And I'll also point out that, the correlation didn't hold with the bonds and the metals, this unemployment. The bonds didn't do anything and the metals took off. You usually see a little bit more direct correlation. Nat gas didn't rally anywhere. Silver gained on gold. That's bullish the metals. When you see the silver leading the metals market, that's insanely bullish precious metals. Yeah, let's just send that to Ira. And this is, again, you're looking around for clues, but you also need to look at the correlations and the, the spreads. That's where you get confirmation. Now we're just sitting here at the 200-day in Amazon. It's trying to figure out which way to go. That's why I don't think you have to do a lot here early on here in the indices, because nobody's decided if they want to take them up or take it down yet. And I'm not getting, I have no desire to get caught in this. It's been a great couple of weeks here with big volatility and an easy trade. So let's just see what it does. Yeah, and the bonds are down and the regional banks are down. Transports can't get going. That's not price positive. SPU bonds are trying to lose its momentum here on the 240-minute chart. Okay, well, they're going to try to take them down to that 75 level in the SPUs. Let's see if they get going. Okay, guys, I'm gonna stop the recording, or I'm gonna pause it. Let's just see. I'll pause it. Okay, so this is why you look at pit charts, guys. And this is the beauty of CQG right here. You can see that this momentum line is the high in the S&Ps today. And now it's trying to come back down here and get into this gap, which is basically 70, 72 is basically 71, 72 is a half of the gap. 75 gives you the reversal on this point and figure right there, with a half being the momentum line and a retest of this little uptrend channel that it's been going back and forth in.
Gold ripping, mate. Ooh. Gold spends its whole week on its knees and goes bang 6 hours on a Friday. Don't you love that?
Yeah, and you got a double top here on the 100.
You're right.
So, this is kind of a funky level, or it goes another 20 bucks.
Well, again, I mean, back to our earlier conversation, I'm watching copper now at a massive level, 429 to 433. Your numbers as much as anything else, and other stuff, but we'll see how that behaves. Now, that's what I'm going to watch. Watch what oil and gold does, oil and copper does relative to gold, to give your secret sauce to equities. Big number at 429, 433 at copper.
Yeah, now they're hitting the bonds again. So this is gonna get interesting. So now, the bonds are starting to get hit a little bit again. So you have to be careful. This is when you want to have a trailing stop in your long metals to see if they go back to the normal correlation with when they hit the bonds, they start taking profits in the metals.
100%. Or you land against copper to hedge your metals out.
Right.
Yeah, that can be confusing, but yeah, 100%. What Judd's saying there is wonderful, because if gold keeps going, maybe finally the bonds have hurt the equities. Finally, maybe, because it's intriguing, because normally the way the bonds are trading, gold should be lower. Is that a fair call?
Yeah, and yeah, you would think that too, and you would think that the dollar would be a little higher too, and it's not.
Agree. Yeah.
And when the correlation has been when the yields spike up, that's negative the Nasdaq initially. But what's going on with the Nasdaq and the S&Ps right now? They're just torturing people back and forth, and that's why I thought they were going to try it both ways today, and I wanted nothing to do with it. I think you're better off with the sectors you like and the names you like. Now they're coming after the railroads. Norfolk Southern just blasted off. Kansas City Southern, CSX, it's got a bid to it. They're buying Caterpillar and Deere. So now they're coming back to these industrial names and the transports again.
Platinum, look at that. Woo.
Oh yeah.
Jesus. That's the other thing about trading. You've got to be patient.
Yeah, and
Are we gonna go back to an inflation regime and stagflation regime, and tech stocks now are lost a little bit, so I don't know.
What do you think?
Well, if we do, and we got this broken supply chains and broken politics, and Fed stimulus at the ready to accelerate at any moment if needed. I don't know. Back to the gold thing, Andrew.
Well, look, one of the things around gold, and people just disrespect all the time. I find it fascinating. Is it trades arguably the best seasonally asset I've ever seen. It never trades well in this period. It always starts. It does well in late November into early January through to March. So if I asked you, where do you think gold traded against the stock market in the last 3 quarters? Most people would think the stocks were higher, right? They weren't. The broadest stock index in the world is the Russell. Gold has won the last 3 quarters. So, but it's a very polarizing asset, but everyone goes, oh, you know, it's got no yield and all the bullshit. Well, nothing has a yield anymore. So yeah, I'm with you on that completely. But
Andrew, kind of from a buy and hold perspective, and you know, I model portfolios, and some of it money's moving, but a lot of it's static. Instead of like on a 60-40 being, you know, 40% bonds now, 35 bonds and cash and 5% physical gold, just as a fixed position. I just think it's going, a lot of the stuff that you wanted from bonds aren't going to happen. It doesn't keep up with inflation. It's, you know, accelerating inflation is, if that's a problem for assets, it's going to be a problem for bonds, but it's probably going to help gold. So that's why I'm just holding 5% gold physical.
yeah, it makes sense.
Yeah, and your crypto trades are out of control.
Yeah, and that's totally unexpected. All of a sudden they come back to it, and now they want it like hell.
Do you still hold that, Peter, the crypto stuff?
Oh, yeah.
Okay.
Full stop into the same level and I haven't backed out. But it's a position that, you know, you got to be able to live with the volatility. And if it's putting too much volatility in your account, you own too much. So that's how I feel about it.
So talk me, if you don't mind me asking the question. I did play that space, but I still have not been able to integrate it into my, you know, real long-term thinking around stuff. Now I get the digital coin, I get the speculative side of it. So why are you a buy and hold of crypto?
Because well, first of all, just starting with Bitcoin, it's a reference asset across the whole space. And it's different than saying it's a currency, and it's maybe a little different than saying it's a store of value, but you can argue it's a store of value. It's also I think there's a lot of people think it's an inflation hedge because it's finite supply and the new supply is decreasing. There's no doubt that blockchain technology is being rolled out in many ways. And there's a huge intellectual capital being spent on developing this space. And you have to respect that. You have to respect that. And Bitcoin is a reference asset across the whole thing. And it's a beneficiary by definition, is the way I see it. And so is Ethereum. But I'm also interested now in equities that have been coming onto market this year, like Coinbase or Galaxy Digital Holdings, and that are, you know, leveraged to decentralized finance, Bitcoin.
I'm going to ask you a really rude question because my mother would really be ashamed of me asking this question.
Go for it. I was a soldier when I was young, so I can live with it.
Okay. The only reason I ask is because I'm intrigued by your dimension and your interest in that space. How old are you?
I'm 63.
Okay, so that's fascinating because for you to be so intimately, well, intimate's the wrong word, certainly intellectually engaged in that space. That's one, a credit to you.
Thank you. But I'm emotionally immature, so that's the way it goes.
Oh boy.
No, but I'm probably calling myself out on saying that because I probably haven't done the work on it as much as you have, because you clearly are articulating a very good position on that. So,
you know, there is a certain amount of like, I don't know that this doesn't just collapse, but the bigger it gets, the more institutional support it has, the more, just by definition, the more real it is.
well, it doesn't really matter if it goes to zero, as long as you get out before it goes to zero, right?
Yeah.
Yeah. I mean, you're not that wedded to it if it starts to behave poorly that you won't get out, right?
No, I mean, I would have to figure out, you know, what's the line in the sand, either in price or in some fundamental or something that just tells you it's just garbage and it's never.
Well, I think the reason why I say that is because having been around enough and Judd too and Ira and others, do never get evangelical on anything.
Well, Peter's got a pretty low average in Bitcoin because he's been in it for a couple of years.
Yeah, but you want to take the money, right? I mean,
At some point,
yeah. I mean, well, you may never want to, but my point is that when there's
I'm going to take a quarter off at a target up ahead and put that into real estate.
Yeah. Well, I was watching David Einhorn today get interviewed by someone, and he's been poo-pooed by many people. But he said something really profound, I thought, and he said the world is mad, and I don't understand it anymore. And frankly, I'm happy with that.
World's,
Why don't you
the
come
world's
to?
always mad.
What's that? Sorry.
Thank God.
Oh yeah, you decided to turn up, did you?
Huh?
You decided to turn up.
Well, I turned on the music Kumbaya because you and Pete were like in a love fest, so I figured I had to,
We,
I had to
we
get
have
in there and
had,
break it up. What?
we've actually had a very profound morning without you, which is unusual.
Well, that's good. I'm out of here. I'm going to New York. I'll see you later.
Where are you going?
New York. New York.
Why?
To see my daughter and granddaughter and son-in-law and because, you know, Manhattan is, I'm not going to Manhattan. I will not be in Manhattan. I will not set a foot in Manhattan.
And why is that?
He doesn't want to get shot.
No, no. Hey, I was downtown. I've been downtown Chicago. That's, you ain't nothing.
So how much time do we have before you get on a plane?
You got about 10 minutes.
Okay, well give us 15.
Nope, can't do it. I'll get yelled
Okay.
at. Let me go get my,
All right, fair enough. So
let me go get my
So what,
last.
what do you think about this low number here that they came up with? I kind of
Wait.
surprised everybody, huh? All right, he's off doing something.
he's hilarious.
But note that even with the right now, with the equities kind of selling off and the bonds selling off with it, this goes back to my thesis that it's corrective and not a top, because the spreads really aren't falling apart.
Yeah. I mean, yeah, back to our previous conversation before the juniors comes back. Yeah, I think it's a credit to you, Peter, to trade that way, because it's momentum, it's traded well. It is, again, I look at Bitcoin against gold a lot. It's into what our old mentor used to say, the death zone. He called it the death zone for a reason. It wakes you up. You know, these are numbers you don't want to play in.
Yeah, and here it is too. It's trying to put in an ORH day, long gold, short Bitcoin.
Yeah.
And there's nothing wrong with Bitcoin. They're just spreading right now.
Shows
That's
they
where you
got
find
interest. They have interest. There's, if you added up the interest in both of those assets, it'd be that's an interesting number. You know, how much capital is being allocated there for various stocks. Yeah.
Are you mining in Bitcoin, Peter, or Ethereum, or both?
Am I mining it? No.
No, sorry. Are you mainly in Ethereum?
Yeah. Am I? I'm sorry, off the accent.
Sorry.
Yeah. I just own those two. I own some other ones. I don't care. I mean, they're I don't know. I don't want to spend time trying to figure it out because it's kind of seems so random.
Right.
Well, we're still waiting for Iris.
Got my coffee.
Okay.
Where are we at?
Okay. Your thoughts on what
You know, I don't, that number, okay, really kind of everything we talked about. So we got a number under what, 200,000, but then with the adjustments, adjust from the previous 2 months. Okay. The rate, of course, fell to what, 4.8, which, you know, the politicians will crow about, but that's an issue of why won't this participation rate grow? That's why the rate keeps dropping, because the participation remains pretty low, especially when you compared it to Canada. Canada had a big jobs number today. The participation rate is like 65.7, if I believe what I saw, and they've already recouped, from what I also read, now I only scanned it, all the jobs, everything back since the
the onset of COVID. So their report was pretty good. The Canadian dollar went up. Interesting that the futures I know are at the 200. We're playing around with the 200-day moving average, which we haven't done that in quite a while.
Yeah, they spiked it. They're over it right now.
It's, they're playing with it. So we'll see. But I'll tell you also, the 10-year Canadian, their T-note yields 1.5 basis points more than the US now. That's also a big change there. That's been changing daily. That's why the Canadian has actually held up pretty well, that. And of course, the energy markets. Okay, so let's cast that aside. The number 0.6 on average hourly earnings, which was not, I wanted to see 0.8 to see how the market would react, but the market's already reacting because the number is not enough. Why the treasury market went back and forth is the number is not enough. And I've been discussing this with Alexandra this morning. It's not enough to curtail the supposed coming tapering, right? Now they're talking, Bookvar, as I sent you, he's at December 2nd or something for the tapering. So this doesn't change that number from what the market's looking at. Or if it does change the market, that'll explain why we're getting somewhat of a steepener, because they may think it's being pushed back to 5 years, only down 1.5, which is the opposite of, that's why I was hoping to see an 800,000 number, because the 5-year actually rallied on the weaker number, the 5-year futures. So rate 5-year dropped while the 30-year was really struggling. So the sense is, some people sense that maybe the Fed will hold off a little bit, but it's really more deemed a neutral number. The problem for the market is that damn participation rate doesn't move. Why aren't the rate itself dropped? Because workers aren't showing up. The participation rate isn't going anywhere. Now, what they're going to look at is the jobs of 24 to 54-year-olds. Because we need them coming back to the labor force. If the participation rate isn't rising because so many of my generation, your generation are leaving, so that's smoothing out, and that's why the rate is dropping. But again, the politicians will crow about the 4.0, we're down to 4.8%, but it's coming on a much lower participation rate. Now, others are saying that this number was weaker than expected because of teachers. There were government workers had a fairly negative number here, and that kind of surprised the market. But it's hard to tell what education job, it's just a very difficult time. Make no mistake, because we're trying to figure out the impact, of course, from COVID. So
Ira, before you go on there,
Yeah.
Robert came in and he had one comment for you. That in the Permian right now,
Yep.
there's competition for trucks between
Right.
the farmers and the oil producers.
You know what? There is the biggest shortage in this country. As bad as the docks are, you just can't get anything from the docks because there's just a shortage of truckers.
Well, you can't get stuff in the grocery stores either. They can't deliver the stuff.
I know. And that's, and I'm glad Robert's around because I wanted to talk about the grains yesterday, because I've actually been buying I put on a position, the beans, because I'm beating myself about no, that's not why. But all this commentary between Catherine Tay, who's the U.S. trade representative, and pushing China to meet the deals under Trump may lead to them. Okay, now here comes the interest rates down again, right? Where the 30 years making new lows, at the 5s, the 10s making. So their sense is that I don't think that may, because the long end of the curve steepening here might mean that they think they may hold off on tapering. But I don't know, you know, that this is really a hard number to read.
Why is gold up on today's lower yields, a high
You
yield?
know, right now it's,
And platinum's ripping.
don't have an answer, but you know, it started with platinum. Platinum's up $44.
You know, we spoke about before you came in. That, you know, I knew that you had a resting bid at 9.15, 9.25. I hope you got some. But the intrinsic 618 was 9.55, and it traded beautifully. You know,
It did. Andrew, we've talked about that, but I don't know why the gold is really kind of surprising me here, that it sustains itself. And I was long, I got out right about here, so it's no big deal to me. Then it ran up, of course, to 1782. I don't know.
well, I think what you said then, you don't know, is the question is that you will know in 2 days. We don't know now, right?
Yeah, but you know, again, if they're going to hold off tapering, okay, and the long end, again, I've been trading the gold off the 5-year more than I have anything else. Because I think the 5-year is the most overvalued. So the 5-year has the most room for yields to rise. And I use the real yield metric for that, meaning that if I look at 5-year real yields, they're negative 150 basis points. Whereas the 30-year has been, you know, negative 30, 35, negative 25. So as I've maintained, the 30-year at least gives me a greater sense of zero real yield. I mean, the 5 is totally mispriced for many reasons, but the 5 has been interesting too, because it was when the 530 steepened from when it hit like 93 and then it ran right up to 113. That was because people were piling into the 5 to get as they got out of T-bills, because they were really, you know, we talked about that if the debt ceiling was not going to be raised, that the money market funds had to be out of T-bills because they were afraid that they wouldn't be paid, that there would be some type of government default. I think that that's so much theatrics, but that doesn't mean that it doesn't affect the what's the word I'm looking for? The market itself, because there are, you know, covenants in a lot of these money market funds and other contractual agreements that have to be adhered to. So gets very interesting in that regard. So they had to get out of T-bills. And I think that they went further down the curve in order to park themselves. But that's just my.
So before you go,
Yeah.
question without notice. Do you think the issues around the insider trading by the Fed governors will impact the appointment of Powell?
Yeah, I do. I do. I think it was good. You know me, up until Jackson Hole, where his speech was so dovish, I thought he was done anyway and this is before, and I put it to Lizzie Warren, because she does. First of all, why would a Democrat, why does Biden want to reappoint him, I should say, when he was appointed by Trump? Okay, so that irritates the more left wing of the Democratic Party. Can we agree on that?
Oh, yeah.
Okay. So if we establish that, it's not like the only ones who think he did a good job, some in Congress, but they get pushed by Wall Street.
Oh, Kevin Griffin.
Huh?
Ken Griffin.
Others, Wall Street, the laziness of Wall Street, they love Powell. They didn't love him, but they didn't love him in the second half of 2018.
Hey, Ira,
Yes.
what constructive thing could Paul do differently in your view? That would make him a better.
Okay, Pete. But let's go back.
Before I answer the question, he could have followed through with what he did in fourth quarter 18 and held his other governors to accountability.
Yeah, that's
that I am held to at any bank I've worked for or hedge fund I've worked for, that I don't trade on inside knowledge.
that's just, And you know what? It's just not inside now. We'll come back to that. But Powell,
That
in,
might not be unique to his time. That might have
In
been going on
2000
for decades.
in 2018, Powell,
He's been a governor for a long time. Mate.
in 2018, Powell erred badly by what Druckenmiller in late December of 18 referred to the double shotgun approach. Okay. Had he only raised rates or only done QT, it would have been a much more effective thing. But he squeezed global liquidity so much.
100% right.
And I'm going to tell you what, and I'm going to take a bow because on July 7th or 9th of 2018, I was on with Santelli and we talked exactly about that. And it would have been a mistake to do both. You have to choose one. We've never been here before, and you have to know and proceed with caution.
So do you think, so, I mean, that is very profound. So what Ira just said then, so effectively what he did was he tapered and tightened, which he gave a system a complete rejection of what they received before in spades. Now, so my question is, was that naivety or was that, what was it?
I think they wanted to normalize QE. That was like on the table for a long time, and that was his attempt at doing it.
Right.
And it was mistaken.
And let's quote Yellen. It would be like watching paint dry. The problem was that he obfuscated it because he was, don't forget, Fed funds went up to 2.5 to 275 as the range, right? While they're doing quantitative tightening.
Yes, it was, yes.
Fed funds were up to 250 basis points. Now, I applauded that, but not the other. You had to do one or the other. He did both, and then he panicked. So, and after he panicked, and I can go back and I wrote a blog about Wall Street then owned him, right? They owned him. Because he was going to be fearful. It was just like Bernanke, I will hold him accountable forever for that taper tantrum, gigantic mistake. And we paid for it, and Yellen paid for it. But these are
no. I'll correct it. We're not paying for it. Your children and my nephews and nieces.
okay. But I'm talking about his markets and his traders and people, and the crude oil is going to hit $80 on the.
But I kind of view as this they've got themselves trapped, and nobody's figured out how to wind it. And you're making the case that do half of it, not both halves, and that seems correct. But nobody has yet resolved that, and I kind of believe they can't resolve it. But maybe I'm wrong.
I agree too, because Lagarde and has really painted them in a terrible corner. And I'll say it again: the Fed cannot be the first to go, because it will affect the dollar, and a dollar rally is the last thing the friggin' world needs right now. Can we agree with that?
Yep.
Yeah, you've showed us that. Yeah.
Yeah, and I think that's absolutely right. So, you know what?
But okay, I'm going to push back on that, and I got this wrong last year, as you know. The dollar is not weakening though.
What?
The dollar's not weakening at the moment.
I can't make out your last word.
The
said
dollar is
weakening.
not weakening at the moment.
Well, it has against the euro.
Wait a minute. It doesn't matter what it does. Andrew, but it's not really strengthening either, right?
Well, no. I mean, I've always, from a currency background, until there's currency volatility, you have no crisis. And I think everyone that runs central banks globally knows that. So
I'm not so sure of that, my friend. I wish I could be sure of that.
Well, I guess I'm saying that my experience has been when you start seeing the Australian dollar and the commodity currencies move around, emerging currencies move around, by significant volatility, then we have a problem, right? We're not seeing that. I saw this to your dear heart, Ira.
Yeah.
The Nikkei was down 7% last week, and the Aussie Yen was up.
Yeah.
So is that a change of the way it's going in terms of trade stuff, or is that a, because back in the day, that would be, Aussie would be down at least 5%, right?
Okay. So, but I'm going to leave you with, and then I got to go.
Okay.
But I'm going to raise this issue to you, Andrew, and think about it.
I will.
The Bank of Japan, now you got an election coming up October 31st, a snap
Yeah.
election in Japan, right? But I believe that the Bank of Japan has been utilizing the Government Pension Investment Fund, which is the largest global fund in the world, and Japanese insurance companies to keep a lid on the yen. Okay. They don't do it like the Swiss do. They do it where the central bank is creating it. Japanese pension funds, because even on days of big stock market corrections, you don't get what we used to call the risk on, risk off trade, right?
No.
I believe that
They were Swiss or yen, right? Basically. Yeah.
yeah, well, but I believe that the Japanese have been, and I believe the BOJ uses them because they have so much money to invest around the world. And that's what's keeping the yen. I think the yen is being held down. I think the world will eventually wake up to it and go, you know what? The Europeans will get crushed if this euro yen stays here. And I was having a discussion with somebody about it this morning. And he says, you keep harping on that. And now I'm thinking about it. And that's right. But that's why you don't get this movement. They're all in this together. The BOJ, the ECB, and the Fed. Bernanke set the table. And they all picked up on, Draghi. This is where the world sits. And that may well be the answer to your gold, by the way. Because the gold really won't go until the world wakes up to the fact that the central banks are so screwed. And they're screwed together.
Oh. Okay, I know you need to go, and this is a big question. So
Oh yeah, this is
I'm going to leave this question for tomorrow. But I think where platinum held this week and where gold has held the defense of yields going up is a week we should pay attention to.
I think you're right, but right now you're seeing that the bonds are finally having some effect
right
on the metals because they're all in profit-taking mode now, and they're all back to buying equities again. So This is just going to be a game going back and forth, and you got to trade it level to level. And
no, certainly for the guys in the room, and you got to take your money off and trade in, trade out. I'm talking where it may be in 18 months' time.
Okay.
No, Andrew, listen, again, we screw people up when we think too long-term, but we're going to look at the things that we need to look at here to direct that. But it's definitely going on. And I will always come back. You know what? You don't buy gold for inflation. By the time you buy gold for inflation, it's already done with it. In a fiat currency world, gold is about central bank credibility. Because in a fiat currency world, that's all you have is central bank credibility. So when you open up your trading every day and you can take a look and take the temperature of the market's attitude about central banks. And I think that's a very, for me, this is not new. This has been my mantra for sure 2.5 decades, well, probably longer. But
and the irony is that it's been a bloody good investment since 2000.
Yes. Well, and I'm not good because I do have to go, but that is.
You go and thank you for your time. Fly safe and enjoy your family.
But that is the penultimate question that will always lead you to all of this. Now, on a day-to-day basis, as we see, and the people who are trading at the Fed, again, it wasn't what they were trading. It was the fact that they appeared on CNBC, Bloomberg, and Fox Business 67 times in 2020. And every time that they're there, they get banner headlines.
Look, I ran global business for some of the top 3 firms in the world.
Right.
If I did that, I'd be in jail.
Yes,
stop.
Judd and I laughed about it.
Full stop. Full stop. If I did that, I would be in jail.
That would be like me or Judd yelling in the pit a false news headline, knowing that everybody was positioned one way. That's what they were. And what were they trading? You know, guys like Leisman, it's just BS. It's not that they were buying the same bonds that the Fed were buying. That's that's absolutely bull crap. Because they were trading Kaplan and Rosen were trading S&P futures. Okay. They were making market moving comments, and they knew that they would move the market. These aren't idiots. And of course, that's the criminal action. That's the criminality of it, because they were able to move markets because they have a platform that we don't have. Doesn't matter.
I have 10 more questions, but I'm not going to ask them because you
All right,
need
well,
to-
let's table it till
Good
Monday
night.
and then we'll,
Okay.
we'll-
All right, I'm out of here. I gotta go.
okay,
Take care.
see you, Ira, thanks. All right, so just to sum up here, because I'm gonna stop this recording. You know, earlier, about an hour ago, I said you have to watch for the correlations in the long end to see if the metals start reacting to the long end of the curve. That's why you use trailing stops and stuff. So you've already got, you know, platinum off $15 off its high. And, you know, and the gold went up to one of those static areas and backed off. And now it's in the middle of nowhere again. So, you know, it's all part of this trading mentality, even with the long end down. Okay. The spreads are positive. The SPU bond is positive. All that tells you is that
We're looking at the
whatever,
quote board, Judd.
oh, sorry. Whatever, you know, price action you're seeing in here, is corrective. So the S&Ps and the NASDAQ are just, you know, the smelly end of the dog today. And that's why, you know, I didn't really want to do anything with it today, unless you were involved in a specific name or sector. Now, the other thing I'd just like to point out to you guys is that oil just came up to a natural number, $80. It's not a place to initiate a trade. Anytime you get a market, whether it's, you know, like in the yen at 140, 120, 110, 1, you get to these levels, you know, 2,500 in the you know, the even numbers in the S&Ps, you know, whether it's like 4,400, 4,500, you don't want to overtrade on those round number areas. You know, it's usually not a good idea. So it's just something to be aware of, guys. All right, anybody else have anything else to add here? I'm gonna stop this recording. There's a lot of information that you can put out. Well, Maria, there's certain numbers that never go away. Round numbers, natural numbers, when you get into them the first time, they're just a difficult place to trade. So here, you know, crude's up at $80. You want to start buying crude at $80? How much are you going to risk? So it's just one of those numbers where, you know, it's not a great place to trade. You know, if it's a Nikkei, okay, 30,000 a Nikkei, 25,000 a Nikkei. When you get to these big round numbers, the market has to digest these types of levels, and you know, that's just decades of looking at it. Okay, Angelo. So the you know, I probably didn't explain it as well as I should have, but here, let me try to give you a bigger picture like in the NASDAQ. Okay. They're hurdle numbers, okay? What was this high? You know, they get up to some of these numbers like 10,000, and then it gets sticky. And then it'll go to 12,000. Basically, and then, you know, price struggles at these areas for whatever reason, they just do. So it's $80 in oil, $90, $100, $110, $120. Every time you go up in one of those increments, markets have to digest those levels for whatever reason. So all I'm saying is that it's just something that you want to be aware of. So the first time into a big number like that, you know, it'll wind up being a better exit zone than an entry zone. Does that make sense to you, Maria? You know, markets have to digest levels. They just aren't going to run through them. So, you know, here we're up at $80, you know, and it's going to spend some time trying to basically digest the level. Now, here's another example. I suppose I can put up the you know, this is 3,400 in the S&Ps. You know, every 100 number from 2016, 2017, you know, 2,500 was a big number. And once it started holding above it, you know, it rallied big time. So you just have to see how these round numbers like 2,500, 2,000, you know, 3,000, all these 100 numbers are levels that have to be digested. So when they're coming up or coming down on one of those, you don't want to overtrade it. Okay, any other questions, guys? And then, you know, we're going to stick around here, but I'm just going to stop the recording.